Nvidia stock has dominated the AI market, and I do believe there's going to be a selective few amount of companies that Nvidia is choosing to help dominate in this AI race. And on today's episode, what I want to do is take a closer look at a company that Nvidia has invested in, and I believe has a multi-bagger opportunity and is becoming one of the biggest positions in my portfolio. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so if you guys have been following this channel, I focus a lot in the AI semiconductor market. I cover Nvidia almost on a daily basis, and my portfolio right now is dominated by Nvidia, but I do believe there's other opportunities that can come out with it. And today's company I'm going to take and kind of share a closer look at is Coreweave. This is ticker CRWV. Right now, the stock is up over 157% year to date, but unfortunately, from its high, the stock is down nearly 43%. On today's episode, I want to share our first top-level bullish case, followed by the bearish case, because there are some things to consider. Next, I want to go a little bit more deep into the bullish thoughts and finally end with my final thoughts. Now, quick history, I am accumulating shares right now, looking to go somewhere around 50% of my overall portfolio, currently sitting at about 6%. Average cost right now is about $88, and I'd like to accumulate anything below $100, which is somewhere below a $50 billion market cap. Quick history, I did buy a nice amount of position at $40 in the April lows. I sold the majority, 90%, in the $120 to $170 range. Now, I did sell because there was a huge growth, almost 300% in just a few weeks, and I locked in the gains. I'm actually very, very happy that I did that. Now, on the top level long term, I believe companies right now are AI compute constrained. We hear that from every AI company. And the AI market, we heard from NVIDIA's most recent earnings, are still in early innings. We even hear that the potential market of capital expenditure could hit $2 trillion for data center by 2030. So Coreweave helps eliminate the bottleneck of AI compute. So that's the easiest top level bullish long-term thesis. Now, we're going to look at some of the other bullish thoughts later on, but I want to start with the bearish thesis because there are some things to consider. Now, we are going to look at some charts here from fiscal.ai. If you want to get quick charts like this, check out fiscal.ai/Jose for 15% off. This is a platform I use on a daily basis, and if you are serious about investing, I 100% recommend them. Now, bearish thesis number one is heavy debt. We can see from the chart on orange, this is long-term debt and has grown from just 4.9 billion last quarter to roughly 7.4 billion. And total cash and short-term investment is actually decreasing. So they are becoming massive, massive leverage. Now, AI infrastructure is expensive. There are some thoughts that there are other AI infrastructure players that have a better balance sheet. I do want to say for those other companies, I expect things to start looking like this very, very quickly. Now, kind of to combat this bearish thesis, I want to look, and also we can see capital expenditure, right? Analysts do project capital expenditure to continue to grow for Coreweave, which makes that long-term debt most likely going to get higher and higher through the upcoming quarters. But the anti-bearish thesis to this kind of heavy debt came in from their CFO. So the CFO mentions that one of the core principles that Coreweave is scaling on is having revenue visibility and building their financing structure based on long-term committed customer contracts. So there, you can kind of pause the screen here and read the rest. I have a lot of great highlighted information, but pretty much they're saying that the only time they build massive infrastructure is if they have a long-term contract. So while they might have to build this long-term debt, they're overall going to be making revenue for a long term on this infrastructure, which they will be able to be free cash flow positive in the long term of things. So it's saying that they have a nice backing on that long-term debt. They're not just creating random infrastructure and hoping it gets rented out. They get to rent out first. And here in one of their slideshows, they actually kind of talk about their contract mechanics. The first thing is contract signing. After they get the contract signing and then initial prepayment, they go into purchasing that infrastructure. Then they get that payment on a monthly, yearly, whatever basis, and that helps kind of pay off that debt. And they do it in a way that they're going to be obviously profitable and free cash flow positive in the long term of things. The great thing is most of these contracts are very, very long term, 4+ years. The other thing is these GPUs tend to have a longer life than many expect. Even after those long-term contracts, they're able to re-sign them for even smaller life, like 2+ years as well. They talked about it in their most recent earnings that the Volta and the Ampere, which are all 4+, 5+ years GPUs, are still being rented today. Now, bearish thesis number 2 is customer concentration. And this is pretty big. I mean, we can see customer A in the 3 months ended in June 30th was about 71% of total revenue. And customer concentration is normally looked like a scary thing because what happens when that customer decides to leave, that goes with a huge portion of this company's total revenue. Now, there are a few things that I want to kind of combat about this. First is, remember, these are long-term contracts, 4+ years or so. Some a little bit shorter, obviously some a little bit longer. But one of the reasons that they're able to do this is because of their technology leadership. We can see that they were the first to deploy the Hopper H100s and H200s at scale. They were the first to deploy Blackwell's, the GB200 at scale. The ability to deploy first and at scale allows them to be very attractable by the big AI companies. In the current AI race, being able to start training first or inferencing at a large scale is a massive advantage. And that's why companies like OpenAI go with Coreweave, because they want to be ahead of your XAI, they want to be ahead of your Gemini. And if you're able to scale and produce it first than anybody else, your value becomes a lot higher. And this is something that CoreWeave continues to dominate. There's also some recent independent research that has given them the platinum status, the only one above all hyperscalers and neoclouds to receive that recognition, based on the ability for them to be able to scale AI infrastructures at immense levels. We're talking about 10,000 plus GPUs, which is not an easy feature. Now, I want to kind of, we talked about the 2 bearish cases, right? Obviously, I think these are the 2 that I hear the most, the huge debt. And I kind of talked a little bit about why I don't consider that too much of an issue in the current AI market, and obviously the customer concentration. Now, I want to talk about kind of the bullish thesis. And bullish thesis number 1 is insane demand. We can see RPO is $30.1 billion. 15 billion is expected to be in the first 24 months, 12 billion in the next 2 months after that. And then they even have contracts 49 to 72 months in the future. And that's about 3 billion. So revenue this year could easily be that 5 billion. Therefore, 10 billion for the next year is not impossible based on their RPO right now. As we saw from anti-bearish number 2, they are good at what they do. So not only do they have insane demand, but they also have technology leadership. And insane demand plus top tier players equals beast mode during the overall AI ecosystem. Now, the other thing with this explosive demand is just the amount of scale. 18 months, they were talking with data center companies or these AI compute players that needed AI compute for 10 plus megawatts. Now they're talking about 50 to 100 megawatts. And the pipeline for the future is already looking at a gigawatt of scale. So the demand continues to surpass supply. One of the biggest bottlenecks right now is actually power shells. And that's something I've talked about in other videos. So make sure to check that out as well. But today, the conversation is how many gigawatts can you build in deployment? And as we saw, CoreWeave is a company that is able to deploy a lot of these GPUs at scale, and this is going to make them a very, very attractive player during this insane demand market that we're in right now. Now, thesis number 2, in my opinion, is the partnership with Nvidia. We can see Nvidia recently released something called Spectrum XGX Ethernet, which is one of their new networking solutions. Can you guess who was the first company to accept this technology? It was CoreWeave. Now, there are reports that NVIDIA owns a nice amount of equity position in CoreWeave. When I talk about partnership, I actually don't care much about the equity position. What I do believe, though, is CoreWeave And what we see is Coreweave is one of the first to adopt NVIDIA solutions. Coreweave, as we saw from previous thesis, is also one of the best at what they do. So NVIDIA is out there and wants to show other cloud server providers that there are other players out there, right? Right now, NVIDIA wants to showcase that they are not at the mercy of your Microsoft or your Google Cloud. NVIDIA wants to show you that there are companies like Coreweave that can come and eat your lunch. Now, the easiest way to think about this NVIDIA partnership is Coreweave is both NVIDIA's yes man, but also the best student in the class. So being the best and the yes man gives this NVIDIA partnership even more strength. I do believe being the best is probably what NVIDIA cares about the most. If you're the best, NVIDIA obviously focuses on you. NVIDIA also has this amazing theory of building AI factories, this new style of data centers. And CoreWeave is the perfect fit. As we've seen in the past, that CoreWeave wants to be the one that creates this new AI market, and they are not based on legacy products. They are the ones that have the AI infrastructure and don't need to retrofit anything. Now, my final thoughts. The bullish thesis is definitely all based on the strength of the AI market. If what Nvidia CEO said is true in its latest earnings, we can see we are still very early. If the AI market slows down, the heavy debt on this company's balance sheet can destroy investment returns. I do believe this is a multi-bagger, but it will be very volatile. We just saw a 50% drop in the last few months, and I do believe 50% drops like this will continue, and it's not impossible for the company. Regardless, in the current AI market ecosystem that we're in right now, we are still AI compute constrained, and we need a top tier player, and CoreWeave is the one that does that. So this is why CoreWeave has become one of my favorite positions right now, one of my most attractive positions right now, and one that I'm continuing to accumulate in my overall portfolio. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.